Welcome to today's practical planning tip by ParkBridge Wealth Management. My name is Jonathan Shenkman. I'm the President and Chief Investment Officer of the firm. I'd like to start a new video series today on strategies for folks who get laid off before they're ready to retire. So a recent study conducted by researchers at ProPublica and the Urban Institute found that more than 50% of workers experience an employer-related involuntary job separation after the age of 50. The workers laid off later in life had an extended period out of the workforce, and if they were able to find a new job, it was at a much lower income. The research also found that only 16% of the people in the study were still working at age 65. Some may contribute this phenomenon to the prevalence of ageism in our society. Others may contend that it's just a practical business decision for companies to save money or attract new talent. Regardless of the rationale, the repercussions for folks who are being let go from a job late in their career can be disastrous financially. Most investors plan to contribute meaningfully to their savings as they simultaneously hit their peak earning years and no longer had expenses that come with raising children. Dipping into one's savings 5 to 10 years earlier than planned instead of continuing to save and invest can lead to a very challenging year ahead. The best approach for this type of undoubtedly frustrating situation is to be proactive. Procrastination can further exacerbate the negative impact on one's finances for the years to come. In the coming days, I'm going to offer 10 suggestions of planning items to consider after one is laid off in their career. And the first suggestion for today is to file for unemployment insurance. When dealing with the shock of being laid off from a longtime employer, one of the first things to consider is filing for unemployment insurance once eligible. This may be overlooked by higher earners where unemployment checks may be quite modest compared to previous earnings. However, it will serve as an income stream to help with some basic expenses, so there's no reason not to claim the money to which you are entitled. Tomorrow, I'll discuss budgeting for this difficult time. And with that, I hope you found this practical planning tip helpful. Until next time, stay prudent, practical, and don't forget to plan ahead.